Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Good morning.
I think it's possible that we get closer, very close to the all-time high today. I mean, it's 1% away, right? I mean, so for all practical purposes, already there. But the late surge yesterday, the last 1 hour surge really took us within 200 points of it. That's 1%. Well, overnight cues are positive. Once again, you've got sharply lower US yields. This is the way you want market interest rates to head. And that is exactly what is happening. You've got a repeat of what we saw the day before. Yields are down. Look at that. I mean, 9 basis points on the 5-year, the 10-year down 8, the 30-year down 8. Yields are down. The dollar is down. And equities, especially tech stocks, NASDAQ, went up about 1.5% once again. So the rally in the US continues. The SGX is indicative of a flattish kind of start, similar to what we had yesterday. But as I said, the impulse is to buy the dips like what we saw yesterday towards close. Good morning, guys.
Hi, morning, Prashant. Morning, Nigel.
Morning.
And the momentum could continue, right? I mean, you saw it in late trade yesterday. The market was doing nothing through the day.
Yeah.
But that little bit of a pickup is what took the Nifty at that 18,400 mark. So we are just inches away from all-time highs, about 1% away. And the Bank Nifty is the one that scaled a record closing high yesterday. So do keep an eye out on that. Over there, the momentum could perhaps continue. And even global markets, I mean, the Dow was up in the green, about 60 odd points. You've had Walmart that's gone ahead and raised its outlook for profits in 2023. So the consumption data over there will be keenly watched out for. At the FII desk, flows have been muted for the last couple of days, just cooling off a little bit as perhaps this market is in the consolidation phase. At least that's what we've seen in the last few days. So yesterday, FI sold about 220 crores, DI sold 540 crores. But the big thing is that this market is definitely in high momentum. It's a buy on dips market, and it's just a matter of time before we hit those all-time highs. Courtesy, of course, the Bank Nifty, which has played a powerful role in this large rally that we've seen. So maybe not today, maybe not tomorrow, but it's just a matter of time before it comes.
Yeah, I mean, and Sonia, Bhangra, right?
I've been reminded of that several times,
When the all-time high happened. No, I guess we all will, right? Nigel will lead us. All right, let's just take a quick look at how things are. So it's exactly the kind of price action that you want to wake up to if you're long, which is that US equities were higher. Yields are sharply lower and the dollar is down as well. I mean, the oil price also behaved itself. So there's nothing negative of the market price action that we saw. By the way, intraday, you had a bit of a sell-off, but then it came up. We'll maybe talk about that a little later. Momentum is extending mainly because of two reasons. The one is data vacuum. There is not too much data all the way till the 2nd of December, which is a Friday when you get the jobs number, the payroll, the big monthly payrolls number out of the US. So between now and then, there's not very much. There's a lot of Fed speak. There's a lot of Fed speakers who will come and say one thing or the other. But unless, somebody explicitly says, well, we got to do another 75, press the pedal or something like that. I mean, the market is kind of pricing this in its own stride. The other is calendar. What do I mean by calendar? Investor positioning. For all practical purposes, you've got a couple of weeks left. When people go on holidays, it always happens at the end of the year. And the impulse generally is to protect what you've made for that year and not spoil your record, spoil your track record one way or the other by doing something foolish towards in the last couple of weeks of the year. So that's the institutional imperative. And because of these two reasons, momentum, because of the calendar that's basically close of the year, and data vacuum, it's possible that these moves can stretch a little bit more out there in the US. Of course, there is a risk of exhaustion, and that is rising as the market keeps going higher, so one needs to be watchful there as well. In data, you had the US producer price inflation numbers which came through. It supported the moves. Numbers are benign, 0.2% month-on-month growth as compared to 0.4%, which was expected. Geopolitics, there is this news you'll read. There was a missile which landed in Polish territory. It killed 2 people, and there was alarm that maybe, the theater of war is expanding to Poland, but then the Polish president came out and said it's a one-off. Russia denied that it's kind of aimed its missiles towards Poland. I think NATO is getting involved. The market did sell off by about 1%. It erased the gains mid-session, but it kind of came back up on those assurances. Here in India, there was a late surge, which basically took us back above 18,350. We closed above 18,400 actually. Banks, mainly ICICI Bank, is what kind of led the push higher. Nifty is now 1% away from all-time highs. I think we get to that and then we kind of project higher levels, but it's very close. And the Bank Nifty can continue higher towards the upper band of 42,500 or so, which is not very far away from where we are at. I mean, if you get a dip, as wait it out, see the market texture, and then maybe take long positions. That's what's worked over the last so many weeks now. I think because yields are sharply lower, watch out for tech stocks, new age tech stocks, etc. as well. These digital themes. That's been the one problem. Cost of capital rising, it's going the other way, and I think that's largely supportive of these kind of businesses, technology slash digital kind of businesses. Najil, what are you watching?
Well, Prashant, I'm getting a little nervous because you're telling me as well to get my dancing shoes on. I thought only Sonia's going to be leading the way.
I thought in this group, you're the dancer, Najil. I think we need that.
Why not? If all-time highs, I mean, sing, dance, go for it.
The bulls are going to be dancing. Forget about us, right?
Absolutely. Well, the markets actually, we are firmly in bull grip. And there are three big reasons I'll say that. Yesterday, in fact, we did see a late surge. And the kind of strength we saw on that was very, very encouraging. Point number one. Point number two, the India VIX has cooled off to sub 50 now. It's at the lowest we've seen in the last 14 months or so. So that's pretty good news. You always like the VIX to cool off. That's a bullish sign. There's a tailwind coming in from the weaker dollar. And for me, that's a big, big positive for emerging markets and for India as well. Now, yesterday, everyone was wondering, why did we see that late surge in trade? The Nifty Financial Services Index, that expiry plays out on Tuesday. So that, did see expiry play out, and that explains why we did see it move higher. And the Nifty Financial Services Index, well, it includes banks as well as financial institutions. So yesterday, for example, HDFC, it's not part of the Nifty Bank, but that moved up in the final hour of trade. HDFC as well did do pretty well. So the HDFC twins and Bajaj twins, both of them don't account for much on the Nifty, but on the Nifty Financial Services, well, they account for closer on 10%. So there was an expiry that played out on that index, explains why, in fact, we ended at the high point of the day. The FIs in the FNO market, well, on the index futures, they added 3,000 longs as well as shorts. They bought some puts as well. But the most encouraging sign is the way they wrote the puts yesterday. And remember, all the calls that were written in the previous session, well, they wrote 60,000 contracts. Yesterday, they unwound 45,000 calls that were written in the previous session. So that's telling you call writing is not working at all. And that's writing seen at the 18,300, 18,400 put. Between them, it added close to around 70 lakh shares. But that's an interesting data point. The 18,300 PCR, that's the put call ratio. It's at 2.5:1. Because just take a look at the open interest on the 18,300 put and the 18,300 call. That's giving you a sense that, in fact, the bulls, they believe that this base for the market is gradually moving up, and that expires tomorrow. So in the near term, that 18,250 odd, you're counting on that holding out. The approach to trade has to be buy the dips. You're getting a bit of a dip today. Maybe you'll get a little bit of a deeper gash during the day. Need to go with the trend and buy the dips, and I think you'll make a lot of money going by what we've seen in the last few days. SGX Nifty 30 points down, maybe a 50-60 point down take will be a blessing actually for the bulls. Sonia.
Oh, absolutely. They haven't really got a big dip, right, to sort of jump into in the last many days. It's largely been an uptrending market. But wanted to point out that there are two listings today. There's Bikaji Foods that lists, and there's expected to be some listing gains. We've spoken to the management in the past that it was decent subscription about 26 times. And there's Medanta Global Health that will list today as well. So those are the other two big events to watch out for. But let's kickstart the show. First up on the equities front, we have Sanjeev Prasad of Kotak Institutional Equities saying